What if I told you that the biggest mistake most people are making right now is believing the crypto bear market story, right at the exact moment when the United States is quietly laying the groundwork for one of the strongest crypto expansions we've ever seen? Because beneath the fear, the headlines, and the endless doom narratives, something far more powerful is unfolding, and almost no one is paying attention. Hey guys! Welcome back to Whiteboard Crypto Update. In today's video, we'll talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Right now, the United States is stepping into what I believe will be remembered as a true golden era for cryptocurrency. Not hype, not speculation, but a structural shift that has the potential to erase years of fear almost overnight and replace it with a surge of economic activity that becomes a massive long-term catalyst for crypto prices. In this video, I want to walk you through the full thesis, what's happening behind the scenes, why the bearish narratives are dangerously misleading, and how the next major crypto expansion is slowly forming right in front of us while many are too distracted to notice. To really understand what's happening, we need to look back at the last 3 to 4 years. This period has been extremely unusual, especially when you compare different parts of the crypto market. While much of the broader crypto space struggled, the XRP community found itself in a very different position. XRP experienced institutional momentum, regulatory clarity, ETF-related developments, and the conclusion of a major legal battle. All of this allowed XRP to outperform large portions of the market, while many other cryptocurrencies sank toward multi-year or even all-time lows. That contrast created confusion. Many people started claiming the bull market had ended or that a prolonged bear market had already taken over. But the reality is far more nuanced. For most cryptocurrencies, there never truly was a traditional bull market. Instead, we entered a completely different environment, one defined by a flight to quality. Investors stopped blindly throwing money at anything with a ticker symbol and started focusing on assets with real-world utility, institutional demand, regulatory clarity, and long-term relevance. This is why assets like Bitcoin and XRP managed to perform during what was objectively one of the worst macroeconomic backdrops imaginable for growth assets. High inflation, government shutdowns, trade tensions, constant policy uncertainty, and most importantly, a prolonged high interest rate regime. Historically speaking, this is the worst possible environment for risk-on assets like cryptocurrencies. Yet despite all of this, Bitcoin and XRP held their ground far better than expected. That alone tells you something important. Their fundamentals are stronger than most people realize. But here's where things start to change in a major way. While fear-dominated headlines and media narratives screamed about economic collapse, the United States quietly posted GDP growth numbers that completely shattered expectations. We're now looking at economic growth approaching levels that most analysts would have laughed at just a short time ago. This is not a weak economy. This is an economy accelerating at a pace that forces a reassessment of risk, capital deployment, and growth opportunities. At the same time, we're witnessing a major shift in monetary policy direction. The era of restrictive interest rates is nearing its end. Pressure is mounting for rate cuts. Liquidity conditions are beginning to loosen, and the environment that once trapped capital inside treasuries is starting to unwind. For years, crypto markets have been starved of liquidity, not because the technology failed, but because the macro conditions made capital extremely cautious. This is the critical point most people are missing. Crypto didn't underperform because it lacked innovation or adoption. It underperformed because money had nowhere to flow. When interest rates are high, capital avoids risk. When rates fall, capital searches for growth. That transition alone has historically been enough to ignite massive market expansions, and crypto is positioned perfectly for that shift. Think back to major financial crises in the past. In moments of extreme fear, even strong companies struggle to perform at their full potential. Yet once the fear fades, those same companies explode higher. That's exactly what we're seeing now. The crypto market has endured maximum fear conditions while quietly strengthening its foundations. Regulation is improving, institutional access is expanding, ETFs are opening the door for new capital, infrastructure is more mature than ever. The market wasn't broken, it was restrained, and now those restraints are starting to come off. As economic growth accelerates and interest rates trend downward, the narrative collapses. It becomes impossible to argue that the U.S. economy is failing when corporate earnings, productivity, and GDP growth all tell a different story. Once that realization spreads, capital will move fast. Investors who sat on the sidelines out of fear will suddenly rush back in, chasing the same assets they ignored during uncertainty. This is how paradigm shifts happen. Slowly at first, then all at once. When liquidity returns, markets don't creep higher, they reprice violently. And crypto, being one of the most liquidity-sensitive asset classes in existence, reacts faster and harder than almost anything else. The fear that once suppressed prices becomes fuel for the next leg up. Years from now, people will look back at this period and say the signs were obvious, the fundamentals were improving, the macro headwinds were temporary. The fear narratives were loud but wrong, and those who understood liquidity, policy, and long-term adoption were positioned ahead of the curve. At its core, markets are driven by one thing: liquidity flow. When central banks tighten, markets suffer. When they ease, markets thrive. For a long time, crypto faced one of the most hostile liquidity environments imaginable. Now we're approaching the opposite extreme. A transition from one of the worst setups for crypto to one of the best. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching.